Thank you. Thank you for joining me again for this next video. The purpose of these videos is to kind of focus on that area of a implementation, requirements and analysis, because that's where most implementations fail. And I want this to be ERP agnostic, but that being said, the majority of my experience is with Oracle EBS and Oracle Cloud. So you'll it'll be kind of revolving around those features. That being said, I would think the other ERPs they probably have similar functionalities, probably the more advanced ones. I also have experience with NetSuite, Microsoft, and I know for a fact that they have very similar abilities. So that being said, this presentation is going to be more go over a few topics that you should really go over: currency, languages, and audit policy. So yeah, let's go ahead and get on with it. Regarding currencies, I'm going to talk about four different, these are Oracle Cloud terms, Oracle EBS terms, but this is kind of the currency conversion, ways for currency conversions to happen. First of all, a spot rate is good for currencies with fluctuating conversion rates, or when an exact currency conversion is needed. This spot rate would be good, particularly for instance, the Mexican peso goes up and down and up and down, whereas the U.S. dollar is more current. So if you're doing that type of revaluation or translation, the spot rate is kind of what you want for that one. So secondly, a corporate rate. This is more, you want to set this for more stable rates. For instance, Canadian dollar and the US dollar or the euro. These are obviously much more stable because the countries are much more stable. There's a user rate. I guess this is a situation where you just get you can set this up if you have like no international business, and maybe every once in a while there's one transaction. So this is for infrequent entities when daily rates for the entered foreign currencies aren't set up. And finally, the fixed rate. This is a rate where the conversion is constant between the two currencies. Four situations right there. First thing I want to talk about is revaluation. It's a process of revaluing balances that have transactions denominated in foreign currency. It reflects the date of the transaction and the current market rate of each currency. Take into consideration unrealized gains and unrealized losses in making accounting entries. So basically a revaluation, more than likely, unless there's it will cause there to be accounting entries. I'll show an example of that in the next slides. And a batch will be created in EBS with the appropriate accounting entries. Here, for instance, this is an Oracle EBS screen, but I want to go over this because I'm assuming that most ERPs probably have similar revaluation process. So this is in Oracle EBS. This is run by the concurrent manager. You can see that, for instance, you see here that this is the currency that's going to be converted, the Canadian dollar. And this is, it's a corporate. So it's corporate, as I mentioned before, because Canadian is a stable currency in the US dollar. This is the accounting flex fields, but this will basically show where the unrealized gain is going to be hit regarding the accounting flex field. The unrealized loss obviously shows where the accounting is going to hit on the on the accounting complexity. You see, you have the ability to do a revaluation range of accounting, of revaluation. So everything from, in this particular one, there's no range. It's basically one, but you could, start and stop several. And as you can see, there's several blanks down here. Finally, there's the revalue button, and this kicks off what in Oracle EBS is called the current process. So, after this is run, you will see an accounting entry if you go into the journal entries with either the gain or the loss. So again, this revaluation is more of a granular process that actually it creates it create it affects actual individual journals, and it creates accounting entries. Now, the other end is the translation. General ledger translation is used to translate amounts from ledger's functional currency to another currency at the account balances level. The process is converting the financial results of the parent company's foreign subsidiaries into its functional currency. You want to get all the transactions into an environment in which the entity generates and expends cash. So, you have, for instance, you have subsidiaries around the world. You want to be able to express everything in the dollar. And this is more, again, this translation is more at a report balances level as opposed to the journal level. This is really this is for financial reporting, not individual journals, like translation is. So anyway, it's just a function, and this should be common throughout every ERP. At least the ones that are meant for international business. There's the Euro, Oracle Euro currency. This is an Oracle Cloud functionality. It's called the Euro currency derivation. It's nice. It's meant specifically for the European Union, and it defines the relationship between the European Monetary Union and the national currency of the EU member states. So it's just a very efficient way to revalue currency. It's obviously a bit crazy over there. The way their setup is one union with a currency, and then you have the pound and the franc and whatever, all the other individual currencies. So this is a special function of Oracle Cloud that makes the revaluation a lot easier and a lot more straightforward. So regarding languages, if you just do business in the US, you just need English. You just do it in France, you just need French. But I know Cloud and EBS they have very good language. The ability, to have transactions and forms in different languages. You really want to dig as deep as possible up front, when you're kind of going through the international aspects of the business, because in France, as mentions here, you want the international language, the interface language to be French. In Mexico, the interface language should be Spanish. In the US, it should be English. So obviously you want to kind of design Oracle so that is satisfied, those requirements are satisfied properly. Security. I've done a few. That's been a big part of my career, is doing security, financial security, and I've worked at smaller companies where it's not taken too seriously, and people in order management or people who are dealing with shipping things have the ability to make general ledger entries. So it was, but most, I guess corporations, people who have these government bodies, uh, uh, auditing them, and whatever other regulations exist, their security is a lot better. But you want to ask questions about segregation of duties, job roles, dig deep into what kind of security is needed, and GL, AP, AR. AP is a real sensitive one, as you probably know. When you have to issue checks, you want to make sure you have the proper segregation of duties. So, checks just don't go to anybody. Um, I know in cloud and EBS, there's kind of two types of security. Kind of a role-based security. Again, this is to basically enforce segregation of duties. Example, the general ledger manager, the accounts receivable clerk. These are actually EBS and Oracle Cloud both have these standard roles, pre-made. But you might need to drill down and do custom roles. You want to review the role hierarchy and other properties of a job or role, create custom job and abstract roles. You want to view roles assigned to a user and view the users who have a specific role. Another thing you want to take into consideration is data security. Besides the role security, the actual blocks of data, you want to secure them. You can do that a lot of times through the accounting. Again, I call it accounting flex fields, but you could basically divide cost centers. One department can see one cost center, a manager, and the manager for the other department can see the other one, and you can keep those separate. Regarding general ledger security, segment value security, the manager can only pull relevant segments, as I mentioned before. And so basically, segment value security restrict data entry, online inquiry, and reporting well. So this is the ability that the cloud has to kind of provide security on that granular level. So it's again, Oracle Cloud is kind of a state-of-the-art product. Golly, Oracle, as they bought up a bunch of companies, and to me, they're just like SAP, just top of the line. So they have a lot of expertise, and they're just a premium product, and I'm assuming more expensive than the other. Let me move to the next slide. Auditing. This is used to monitor user activity and all configuration security and data changes that have been made to an application. Auditing involves recording and retrieving information spanning to the creation, modification, and removal of business objects. All actions performed on business objects and modified values are recorded. Now you have to set up that recording. This is Oracle Cloud, but you have to set that up. Oracle Cloud has a very good functionality as far as that's concerned, and EBS not as good. But there are audit functionality there. And the audit info is stored without any intervention of the user in any explicit user action, and it can be retrieved, parameters as needed. They have a lot of different roles. So let me go to the next step. In Oracle Cloud, basically you go to the setup and maintenance area, and you go to manage audit policies. You must put a lot of thought into what you want audited and when. The system is very powerful, but if you don't turn the functions on, you can't recover the information. So I would say, up front, I don't know if it's going to be your top priority, but if up front you get that information, spell it out what's needed. Obviously, audit is a very important function. Let me go over at least a cloud example. Again, you can see here the area is payments, but say there's about 10 or 11 areas, and each of them have multiple objects. But basically, at least you have a choice of several hundred things you can audit. But in this case, again, payments is kind of the overriding area. And as you drill down, the parent objects is the internal pay audit setup. And then and within this parent object, you can audit two things: routing rule and the funds captured payment method. So you can get really granular on those. And this, again, this might take up a lot of time because there is a lot of functionality here. But if you're a big company and you really want to drill down and then audit these things really well, it's probably worth the time spent. And that is about it for this video. 3 areas I wanted to go over. If you have any questions, feel free to email me. Again, I'm at home making these videos because of the coronavirus, so I do have time uh, answer any questions. Anyway, thank you for watching. Goodbye.